Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. We continue to get discussions and speculation that Disney may actually be up for sale and that Apple could be the company that buys it. Now, Disney CEO Bob Iger has suggested that there could possibly be partnerships for assets like ESPN in streaming and has not ruled out selling the company outright. That came up in the conference call. And he basically just brushed the question off. Not that he could actually answer it on a conference call. But this seems to be getting a lot of legs. It's being reported in the Economic Times. Mac has an article about it in the last couple of days. So does this make any sense? That's what I want to dig into today. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Don't forget to subscribe here on YouTube for all my content. And if you like this video, check out my newsletter, Asymmetric Investing, in the show notes. I want to start with a couple of the arguments that are made for an Apple acquisition of Disney. And one of them that always keeps coming up is that Disney is a partner in some of the Apple Vision Pro content. This is Apple's new VR headset. It needs content. Disney seems like a logical partner. These companies also have a long history together. Steve Jobs owned Pixar. When he sold Pixar to Disney, he actually became Disney's biggest shareholder and a member of their board of directors. So there's some ties there. Some of these projections seem like a big stretch. If you think about the Apple Vision Pro, one, that's not even coming out till next year. Two, it's a very, very high-end device. It's going to sell in very, very low volumes. Less than 1 million units in the first year is what we have heard, probably even less than 500,000. So is Apple going to spend over $100 billion, when you add in debt, close to $200 billion to acquire a company just to get content for a product that isn't released and may sell a few 100,000 units next year? I think that's a really questionable justification for this kind of a acquisition. The other thing that you have to think about is the incentives of both of these companies. Apple is a walled garden. Even things like the Apple TV app, which can now be accessed on other devices, but that was really built to be a draw to the Apple TV box and integrated with things like the Mac and iPhone. Apple wants people to buy Apple hardware, and then the software is in service of that. Yes, it's a revenue generator, but the real money is ultimately made in selling iPhones and Macs and things like that. Disney is a content company. They want to be on every device in every household in every part of the world. They don't want to be, they make content that is available for everybody. And so even being associated with being in that walled garden puts tension between the two business models. One way to think about it is that Apple is a vertically integrated company throughout hardware and software. Disney is a horizontal company. So it makes a movie. It wants that movie to be played at movie theaters, on your cable box, on your streaming device. Then they want you to go to a theme park. It doesn't make sense strategically for those two companies to be combined, because Apple owning Disney would actually make the market for Disney products, whether intentional or not, smaller. Yes, it would give Disney more financial wherewithal. Disney actually has plenty of money and they are generating cash. A lot of the predictions of Disney's demise is just that they're not as profitable as they used to be, but they are making money, especially those theme parks. So this is one of those acquisition rumors that I think once you think about it a little bit, it doesn't make a lot of sense. Disney probably doesn't move the needle for Apple Vision Pro. Even if that is a successful device, why wouldn't Disney just make content for it? Apple could give them incentives for that. If Apple wants to have Disney's content on a streaming service, it could probably pay for that. If it paid enough money, they could absolutely get some of that content from Disney. That might be an interesting partnership, or with something like ESPN. But Apple's business model is fundamentally opposed to Disney's business model. And it's because Apple is vertically integrated, has a relatively small number of products, and it's relatively capital light. Keep that in mind, that despite their size and the amount of money that they generate, they actually don't spend all that much money on R&D or capital improvements. Disney is a pretty capital intensive business. It has theme parks. It has to spend a lot of money to create movies. So as a result, you have to find as many ways as possible to monetize those assets. And that's just fundamentally opposed to Apple's business model. So something to think about next time you hear about rumors that Apple may be interested in buying Disney. I just simply don't buy it, because their business models are so different, even though it might be great to put those brands together. But what do you think? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.